In today's video, we're going to discuss the Yieldmax maintenance changes that were announced today at E-Trade and how I plan to overcome this obstacle to remain financially free. Yieldmax dividends help us earn over $300,000 per year in dividends, as you can see below, and they help us live the FIRE lifestyle, which means financially independent, retire early. If you need help living free from 9 to 5, email me for my e-guides at akintodd48@gmail.com. So Yieldmax, Cornerstone, and Defiance, they all help us earn over $300,000 per year in dividends once again. And our performance value shows that we're beating all of the indexes with Yieldmax. We're up 25%. The S&P is up 16, the Nasdaq's up 22, and the Dow's up 4. The Russell's down 0.5%, so that doesn't really matter. And also today we're up about 6,000 or 0.58%. And so if you look below again, my performance is 25.6, so we'll be over 26% tomorrow, beating all of the indexes once again. And again, many people say this can't be done because Yieldmax erodes and goes sideways to down over time, but I use a little bit of margin here at this channel. For every $1 you put in your account, you get $4 of purchasing power, and I'm just using a fraction of this margin purchasing power to get ahead. As you can see below here, my margin debt is around 239,000, so call it 240, and I've negotiated my margin down twice. My margin interest, many of my clients who bought my e-guides did the same thing. Anyone can negotiate their margin rates down, so please don't ask me in the comment section, well, what about my margin rate? Is this strategy still viable with my margin rate? Well, of course it is. Yieldmax has such high dividends, Yieldmax, Cornerstone, and Defiance, that pretty much any interest rate that you're charged on your margin is viable with these dividend yields, because if you're earning 60% from a Tesla, and you're getting charged even 12%, you're still up 48% for the year, but my margin interest is around 6%. And again, many of my clients did the same thing. So we're going to go ahead and get into the first point of this video, okay? So you need margin to get ahead, and you need dividends to qualify you for loans to banks. That's how we really level up at this in my account, and that's how we live the FIRE lifestyle. Is again, we get these dividends that replaces the 9 to 5, and then they qualify to banks for loans. And Yieldmax is a big player in this. They help us qualify for loans because their dividends are so exorbitant. But now we're seeing a possible problem with Yieldmax. Okay, so E-Trade today announced lower maintenance for Yieldmax, but then they went around and changed it and made it 100%. So if you go to the snapshot of Microsoft, for example, MSFT, you'll see that it's 30% maintenance. And then MSFO, which is the Yieldmax fund that tracks Microsoft, okay, Microsoft, MSFO, it was 30% maintenance. I had so much of my money in Microsoft because it was 30% maintenance, and it's a huge part of the index. It's about 10% of the Nasdaq. But as you can see here, the maintenance is 100% now for Microsoft. Don't ask me why they chose to raise it for Microsoft and not a Tesla. I really don't even want to mention Tesla or Tesla because I don't want them to change that too. But for whatever reason, they changed the maintenance with some Yieldmax funds, and then they didn't change it for others. So we're at 100% maintenance now in Microsoft, which sucks up 100% of my equity. Again, as you can see above, so I was showing you my available withdrawal tab. Okay, so well, 312,000, it's still pretty high. I can withstand over 30% corrections in the market, so I was never really worried about a maintenance change with Yieldmax. I was worried about maintenance changes with Cornerstone and Defiance, and that's one reason why I push it so hard with my income, okay? I'm trying to get as much income as I can to get as much equity as I can. That way I can withstand maintenance changes or disasters in life that occur outside of my brokerage account. So that's why I'm always pushing it. And one of my big fears is a maintenance change. And so you can negotiate maintenance down at your broker, but it's very rare. So only use that when you really have to. I like to negotiate my rates down, but I don't like to negotiate my maintenance down unless I absolutely have to. I could always just switch brokers and go to Fidelity now if I have to. And I'm going to call E-Trade and tell them about that, about how I want to switch and how so many others who follow me would probably want to switch too. I mean, everyone in Discord is going crazy right now when it comes to these maintenance changes with Yieldmax. And so we're all kind of wondering what to do now. And so I'm going to tell you what I'm going to do. And you can feel free to do whatever you want yourself. But remember, this video is not edited. I'm just doing it from my phone. So sorry if it's not coming out perfectly, but here's what I'm doing. Okay. So again, my available for withdrawal was already high. I'm not worried about this available for withdrawal, and I always have put options on. You know that I keep put options on the S&P and the NASDAQ. So even if we had over a 30% correction in the market, I could still withstand a margin call because my puts would clean up in the event of a downturn, especially a 30% correction in 1 month. Okay, if we had a 30% correction over the course of a year, well, then my dividends will just pay back all of my leverage in a year. So I'm not really worried about leverage over the course of a year. Okay, again, because my 300,000 in dividends will pay back my margin debt of 240,000 in less than 1 year, and I have 60,000 in bills, so I should be theoretically at zero when it comes to my debt balance. Okay, by the end of the year, so I should be at zero, and you know, but I always plan to add more debt because that's what I do here at the channel. Why not add debt, especially when it's low maintenance debt? If your interest is low and your yields are higher, then why not keep adding more debt? But nonetheless, I keep my put options on at all times if we have a 30% correction in the span of a month. And so if you need help understanding put options, that's in my volume 5 e-guide. So I'm not worried about my available withdrawal once again because I have high available withdrawal, and then I have put options on to secure me if we go over a 30% correction, and my dividends will just pay back my leverage in less than a year. So again, I'm not worried about margin leverage. Okay, it's really a correction that'll get you in a month that could take us down. A correction over the course of a year, again, can't really take us down because our debt will just be gone and we'll just have a large account and higher equity. So a maintenance change wouldn't even take us down, let alone a 30% correction. But many of my clients, okay, to get to the point, are in Yieldmax, and they have, you know, high maintenance now, and so that's threatening some people with margin calls potentially. So we all know at Discord, you know, my biggest holdings are Cornerstone. I have 400,000 in Cornerstone, and at Cornerstone's a 4-star fund. You can go look at it on my past videos, but Cornerstone's a 4-star fund, and it has all of the index plays in it. It has Microsoft and Apple in it. So I have Cornerstone, and I have 400 grand in Cornerstone, 200 grand in Defiance, and about 150 grand and Yieldmax. So the Yieldmax change didn't really affect me because I only have, you know, about 10 to 20% of my portfolio in Yieldmax, and then the rest of my money is, half of my money is in Cornerstone, the C's. If you go look at a chart of Cornerstone, you'll see that it's down on E-Trade, but go to a Morningstar chart, you'll see that it's up. Okay, you just have to play that fund properly between its rights offerings. That's in my Volume 4 e-guide. I just don't want to hear comments after this video saying, why do you buy Cornerstone? Okay, why are you switching from Yieldmax to Cornerstone if you're a newcomer to this channel when Cornerstone's chart goes sideways to down over time? Same for a lot of Yieldmax stocks. Well, you have to go to Morningstar and go look at the true chart. Okay, there's a real stat on Morningstar that the math that they show on Morningstar. You can see that Yieldmax is actually outperforming the past. YMAG is outperforming the index. YMAX is doing well, and then Defiance, they're outperforming the indexes. And if you want proof of that, just go see my old videos. So for me, I'm in Cornerstone mostly, but Cornerstone, its chart is similar to Defiance and Yieldmax, except again, you have to play that properly around its rights offerings, time it between its rights offerings. That's how you really level up. You take the 20% premium, sell it, and then buy it back after the rights offering is over, whatever the premiums are. You can get the 20% dividend from Cornerstone plus the 20% premium that it averages. I've had 50% premiums, and then you get the special drip for Cornerstone. A lot of people ask me, what's so good about Cornerstone? I mean, really, like, what's the difference between that and like an SPYI or a QQQI? Well, those don't have rights offerings. Cornerstone has a rights offering. It tells you when to buy. It tells you when to sell. It tells you how to level up your account, and it's linked to the indexes, and it's totally diversified, and it has the special drip at NAV. So please look into Cornerstone if you don't know about it already. That's where most of my money is, so I'm not really worried about the Yieldmax change because I have Cornerstone and Defiance. Defiance already lowered their maintenance to 30% for QQQY. So I'm doing just fine. Most of my clients, again, are doing fine because they know not to have too much in Yieldmax. Plus, Yieldmax is stock specific, okay? And that's pretty much the point of this video. That's what I'm going to get into now is, why this is perhaps even a blessing in disguise for us, this maintenance change, okay? And let's go ahead and get into that now. So if we go to a chart of Microsoft, and I was kind of already alluding to this earlier. You saw this chart when I was comparing the ticker symbols maintenance here. Look at the chart for Microsoft. It's been on a tear. It's had a huge run. Microsoft has had a huge run. And go look at Apple, okay? AAPL, because we have 10,000 in Apple and 10,000 in Microsoft, because those are about 10% of the NASDAQ each. And so why not? Well, Apple is 30% maintenance, as you can see. But look, on a 1-year chart, it's had a huge run, just like Microsoft. So while these could continue to move higher, I actually want to sell my Yieldmax stocks now because these stocks have had the underlyings have had such a big move. Apple and Microsoft, I'm willing to sell these stocks now again. So I'm going to sell 10,000 of each, and that's going to rate, because I have 10,000 of each, and that's going to raise my available withdrawal by a ton. So if I sell Microsoft and Apple alone, that's 100% maintenance. So my available withdrawal is going to go from 312 to 332. All right, so now I can withstand even bigger corrections, and I don't have stock specific risk to take me down. You know, Apple and Microsoft can still fall more than the indexes in a given year when we have a correction. So the indexes fall, you know, about 20% in a correction in a given year, you know, sometimes worse, a little bit worse, 30%. But stocks can fall 40, 50, 60, 70%. So I'm not going to get hurt as bad in the event of the next downturn because the market's at the highs. The market's had a huge run, just like Microsoft and Apple. Tech has had a huge run. Well, look at those two. Those are 20% of tech, and no wonder tech has had a big run. So, you know, everything is getting expensive. Everyone's getting worried. All right. So this Yieldmax maintenance change is just coming at a time that we need to manage risk anyway. All right. So I'm going to go ahead and sell Microsoft and Apple tomorrow at the open. That's the first thing that I'm doing, okay? And it's going to raise back, again, a lot of available withdrawal because I'm raising all of that. I'm taking away all that 100% maintenance. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. So the next thing that I'm going to do to take advantage of this announcement, because it was a blow, okay? It was a death blow for all of my followers at Discord. Again, we have over 1,000 members at Discord, okay? In case you haven't joined Discord, it's a great community. It's the best chat room in the world, I feel, for finance. And when you buy my e-guides, you get free access to the Discord chat room for life. And also you get my phone number for life, so just keep that in mind. So Apple, okay? Microsoft, I'm going to sell those. And then I'm going to instead go and sell puts on Teckle. Okay, so I have TECL. All right, TECL already. I've sold a put on TECL. As you can see here, we received $1,000, $10. So that's $1,000 for TECL. Okay, we're already up 9% in TCL because these stocks just keep going higher and higher. And I'm not going to take the $95 gain. I want the $1,000 gain. So I'm just going to sell another put on TECL tomorrow. Why TECL? Because if we go to the holdings of TECL, you'll see that Microsoft and Apple are the top holdings. This is 30% of that index. So this is tracking the XLK, I believe, and this is the technology select sector. And so again, Microsoft and Apple are the top holdings of that sector. So to get more exposure from Apple and Microsoft, because I don't want to lose those, okay, I'm going to sell those. I'm going to raise all this available withdrawal, but they are at the highs. So I don't want to lose them because they're a large part of the indexes. I have to stay indexed here at this channel. That's my strategy. That's the way that we outperform the markets. We just buy the indexes and then use margin on top of it. And again, Cornerstone is the index. So that's why I put so much in Cornerstone. Defiance is also the index. So I put 200 grand in Defiance. But Teckle is a sector-specific index. It's not the index. It's sector-specific. And as I just showed you with the Zacks website there, Microsoft and Apple are the largest holdings of Teckle. So if I sell this put on Teckle, okay, TECL, I just click a mouse and then I lower my margin by $1,000. So that's how I've got my margin down by 1,000. I was at 241, now I'm at 240. But also with Teckle, $90. I did a $60 strike for Teckle, 60. Okay, the current price of Teckle is like around 100, over 100. So it has to go to 60 just to reach my strike price. But then I have $10 that I received from the option. So you have to go 60 minus 10. So my cost basis is 50 in Teckle. It's 50, not 60, because you have to take the strike price minus the premiums received. And if you go to a chart of Teckle, you'll see that, again, it's at around 100 a share. So TECL, 112. So it would have to fall 260 to reach my strike price and 50 to reach a break even for me. And of course, if we got assigned to 50, we would love that because we get to go long TECL at the bottom, essentially. And TECL is lower maintenance than Microsoft, MSFO, and APLY now. So I'm playing Microsoft and Apple at a much lower price than most other people because I'm selling the put on Teckle. And then Teckle is still lower maintenance than the Yieldmax fund. So this is how I'm taking advantage of this news, okay? I'm turning lemons into lemonade, if you will. Okay, I'm selling these stocks at the highs, and then I'm going to raise a lot of available withdrawal doing it. I'm going to manage my risk doing it, and then I'm going to sell puts on Teckle at these highs. Even though I like to sell puts when we fall because you get more premiums when you fall, I'm selling at the highs because it's a way for me to take advantage of Apple and Microsoft without the risk. Okay, the strike price is all the way down at 60, and the premiums we received made it 50 for our break even. Okay, if you need help understanding puts and how I sell them, that's in my volume 6 e-guide. So then with the proceeds from selling more puts on TECL, I'm going to get another $1,000 for that roughly. I'm going to buy QQQY because QQQY has less maintenance than Yieldmax. And so QQQY, we've already showed you this in past videos, but just in case you don't know, QQQY is the NASDAQ, QQQY, and it has 30% maintenance. So a 70% dividend and 30% maintenance. So we're actually going to increase our income tomorrow. Well, not increase it because we're going to lose some from Apple and Microsoft. It's going to be hard to recreate $20,000 worth at about 30% yield. Okay, it's going to be hard to recreate that income, but I will just buy more Defiance as the market dips. I might even buy a little bit more QQY tomorrow, more than 1,000. I'll take the proceeds from Teckle. You know, that'll cut down on the amount that I have to buy QQY with, but I'll probably buy about, I don't know, 10K of QQY, and that'll pretty much replace the lost yield that we had in Microsoft and Apple, okay, MSFO and APLY. All right, so, you know, we're going to raise a ton of withdrawal at market highs to reduce risk, especially stock-specific risk when it comes to selling Yieldmax stocks like Apple and Microsoft. As far as the other ones go that raise their maintenance, I'm going to maybe sell half of those. I have a much smaller amount in those other Yieldmax stocks because they're not a large part of the indexes. So I don't mind even keeping those, but I'm probably going to sell half just to be safe. And then I'll, again, buy more Defiance because QQY has the lower maintenance, 30% maintenance, and it's fully diversified, so it doesn't have that stock-specific risk like Yieldmax has. Also, Defiance seems to fall less on down days. Yieldmax stocks fall by the amount of the stock. So Yieldmax stocks, they can be a bit risky at market highs, and maybe E-Trade's raising maintenance on them because a lot of people are using this strategy with margin and Yieldmax, and the market's at the highs, and so they're trying to make people be aware of that. They didn't raise maintenance across the board for Yieldmax, so I'm not going to say it's something that they have against Yieldmax, but it seems like maybe they're trying to identify all the people who are using margin, and you know, they're trying to, you know, assess what stocks are at the highs and how much leverage is being used with it. Maybe that's why they're attacking Yieldmax. Maybe it was completely arbitrary. Who knows? These maintenance changes can just, you know, they can oscillate back and forth, and you never really know why the change, okay? So I think that'll do it for the video, everyone, okay? If you like what I'm doing and you need help living free from 9 to 5, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so just keep this in mind. We're at 25% today, and we're going to be at 26 after today's gains. We'll be at 26 tomorrow. And we're just continuing to live the FIRE lifestyle and outperforming all the indexes in the process by using Yieldmax, Cornerstone, and Defiance, and some margin. So again, you can email me anytime if you have more questions, but I prefer you don't ask me questions if it's too in-depth because I don't have the time to answer all of your questions. I can barely even get to my Discord people. You have to hit @unconventional. Make sure you say @unconventional wealth on Discord if you want me to respond directly to you. But otherwise, everything that you need is in my e-guides and in Discord, and then you have my phone number to clarify. All right, I think that'll do it for the video. Once again, we're having a storm here in Houston, the barrel storm. I don't have any signal. It's hard to make videos. It's hard to even trade the market, but I'll try to get another video out to y'all as soon as possible. If you know anything else about these maintenance changes, please let us know. Put the comments in the comment section below or on Discord, and I'll talk to you soon, everyone. Thanks.